Markets around the world in a sea of red as softer labor market readings have raised worries that the US is on the brink of recession, but the PSEI recovering from the initial shock, bouncing back 2.6% after briefly touching the critical 6,800 support zone. Can we keep the momentum, or is this rally going to be met with sell demand? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. A couple of economic news kept the markets up. Last Thursday, inflation came in at 3.3%, falling sharply from 4.4% last month and 5.3% a year earlier. This was well below the 3.7 estimates and was a major good news for the Philippine markets. This marks a 7-month low, and as you can see here, core inflation has been steadily going down from its March 2023 peak. Now, while electricity prices went up, food and most of the components of the inflation basket went down, with even the transport and the financial services in disinflation. This good news was enough to offset the unemployment number hitting a one-year high of 4.7% as July graduates entered the workforce, but it was still lower than the 4.9% recorded in the same time last year. So the PSEI celebrated the economic numbers with a strong bounce off of the 6,800 support zone, which we said last week was critical in maintaining the momentum back to 7,000. The sell-off last Wednesday was instantly met with buy demand as the market bounced back strongly to keep within this range. Quick look at the winners last Friday. Manila Water surging 7.72%, followed by GT Cap, Century Pacific, and Security Bank to keep the markets in the green for last week. Foreign index favorites last Friday, we have banks and GT Cap and Pure Gold, while the foreign funds were flowing out of the property stocks again. Right? Remember last week we mentioned that the funds were just going back and forth between properties and banks. The property stocks were on the losing side. Could this week see the property stocks again going up and then the banks going down as usual? Now let's go to the charts. The index managed to bounce back during a wild Wednesday, with the index falling to 6,768 before closing strong on a 1.8% reversal, continuing the rally all throughout the rest of the week, closing eventually at 6,936, which puts us again within striking distance of the hotly contested 7,000 zone. The question is whether we can continue this rally after the dismal US non-farm payrolls numbers last Friday. Now, if we form a lower high at this point, we could see a retest of 6,800 and a possible move into the 6,700 area. But so far, the PH markets have been detached from the US markets, so we could still find ourselves pushing upwards in the coming days. Now, let's look at some highlights. Ali, a good bounce back from a sell-off. Again, watch for its reaction at 36. Meanwhile, its cousin A-REIT down sharply straight past our buy the dip zone. Heavy sell off here. No fundamental reasons on why this is happening. Some say it's a block sale, some say private placement to keep its float up, but this is still a good level to pick up as this puts the trailing 12-month yield of A-REIT higher than the 10-year yields. So there could be an announcement in the coming days. Let's see how this plays out. But guys, this is a great level to come in, and it is the chance that a lot of A-REIT fans have actually been waiting for. Moving on to JFC. JFC forming a golden cross. We've been waiting for 260 for a long time now, ever since April actually. Looks like another possible run towards 275. Top slice a bit when it hits this zone, as valuations at this level will already be at its 10-year average. Investors might rotate to much cheaper stocks when it hits these levels. Now, if you go back to our channel in our June 10 episode, this was the June shopping spree episode. We asked the question which was the best month to buy stocks in the PSEI, and the answer to that question was May, June, and July. August and September isn't so bad, but these are really the best months to buy. You can go back to our episodes on May 27, June 3, June 10, even June 17. These were the episodes where we were tracking most of our favorite stocks as they presented really good buying opportunities. Were you able to buy during that time? Now that 3 months have passed, so let's take some time to look back and see how our purchases did. Now let's start with AC. AC, during this time, we were checking if it was going to hold the support level here. If you were able to buy at these support levels, congratulations. Admittedly, I wasn't able to buy AC during this time, but what I bought instead was SM. I bought SM during this time. There was another opportunity to buy SM later that month. Congratulations if you were also able to buy SM. I also bought AEV during that time because the foreign sell-off in May was mostly directed towards AEV, and I thought that the selling pressure would be over by then. Unfortunately, this was a losing trade for me. I already cut loss. Also bought some Ali shares during that time. This was a good bounce off of that. There was another opportunity to buy Ali. Congratulations if you were able to ease into Ali during these times. SMPH also, I bought some SMPH shares during this time. Another opportunity presented itself later that month. Congratulations again if you were able to buy A-REIT. We were discussing A-REIT that every time it hits 33 was a good time to buy. If it hits 32, buy more. It didn't hit 32, and congratulations if you were able to buy. Again, this is probably another good opportunity to buy A-REIT. I also bought BDO during this time. This was a good bounce. I actually suffered a bit of a loss here, held on to it because it was still within its support range. So far, so good for BDO. I also bought Metrobank during this dip. This was a very attractive price zone for Metrobank, and I bought into this. There were a couple more opportunities to buy into Metrobank, so congratulations also if you did. Admittedly, I wasn't able to buy BPI because during that time it was still trending downwards. Another stock I bought again was JFC. We were tracking this range movement here. These were our buy zones. Congratulations on JFC. I also bought Monde during this time, thinking that it could bounce off of the 50 EMA. Unfortunately, this was also a losing trade. Remember, if your trade setup doesn't work, do not hang on to the stock, cut loss, and move on to another stock. We've had the AEV and Monde trades that didn't work out for us. I already cut loss on that. Instead, what I did with those trades was I shifted the funds over to Aboitiz Power. I bought Aboitiz Power here. It went down here, and you see here I still have the notation here that at this level AP would be yielding 7.5%. I bought into Aboitiz Power instead, and so far so good. I also bought Manila Water during this time. The loss in the Monde trade was shifted into Manila Water every time it hit 25.50. Congratulations if you were also able to enter Manila Water. We also pointed out ASEN was a good buy after it defended this support zone here. We've had 3 opportunities to buy ASEN. Also, congratulations if you did so. Globe also, we mentioned a mean reversion here could be a good time to buy. If you did, congratulations. TEL also a good time to buy here during the pullback. You would have suffered a bit of a loss here. Overall, a good rally for PLDT. This could actually be another good opportunity to buy PLDT. Watch its reaction into the support zone. Converge also, I was able to buy Converge admittedly during this consolidation here, but we were pointing out that a pullback here for Converge because it was trending upwards would mean a good opportunity to buy. Congratulations if you did. So far, the stocks that we were featuring during those times were actually doing pretty well except for Monde and AEV. Hopefully, you were able to take some profits from these gains in the past weeks and treated yourself to a nice piece of steak. So let's move on to the global markets. The US manufacturing numbers showed a contraction again in August amid some improvement in employment, but a further decline in new orders and a rise in inventory suggested factory activity could remain subdued for a while. But worse, jobs numbers caused major concern over the US economy. JOLTS data fell to 7.67 million versus the 8.1 million estimates. This was followed by another dismal ADP report, 99,000 jobs in August, representing the smallest gain since 2021. Jobless claims was moderate at 227,000, but Friday's non-farm payrolls report only added 142,000 jobs versus the 165,000 expectations, and even if the unemployment rate ticked lower at 4.2, it was not enough to offset the clear downtrend of the labor market. ADP numbers going down, jobless numbers going up, non-farm payrolls significantly weaker, and the unemployment rate creeping up to more than 4% in the past couple of months. But most analysts still attribute the bad numbers on seasonal labor trends. So despite the negative labor data, the probabilities for a 50 basis point rate cut still went down to 30% from a high of 40% just yesterday, which could be good news, as again, a 50 basis point rate cut could set us back in the next 4 years. Let's look at the S&P 500 charts. It was the worst week for the S&P 500 as the index suffered a 4.7 loss to end the week at 5,390. The futures zipped past our gap fill zone here at 5,440, so we could probably take that out. At this point, we can assume that rallies here will be met with sell demand, and the more critical 5,350 gap fill zone may be the next level to watch out for. We've been anticipating these gap fills for the past couple of weeks, so this has been largely expected, and this is why we take some profits off during hits on key resistances, as it may actually do this, right? So while the S&P 500 settled at the 100 EMA support, the most likely area for bull demand will be here at the 5,300 area, where the 68 fib, the weekly, the daily, and the monthly support all converge. Now, looking again at the seasonal data, the September and October months again tend to be the weak months for the S&P 500, and the uncertainty leading up to the November elections could trigger a flight to safety for US investors until a winner is determined. Now, should we panic? Looking again at the historical charts, we are so far tracking very well into the seasonal averages, assuming that there's no recession, and it doesn't look like we will have one at this point in time. Now, the markets do tend to become choppy leading into the rate cut announcement. We've so far had a rally here, and we usually get a pullback right before the announcement here, followed by more pressure a few weeks before the market regains momentum, as the chances of a 20 basis point rate cut has improved to 70%. The bulls should be celebrating soon. But if we get a 50 basis point cut, this might signal to the market that things are worsening at an unacceptable pace, and this could cause the markets to overreact to the downside. Now, so far though, we're still doing pretty well, at least compared to previous down years. We could probably add one more 2% down days this year, but so far, when we start the year strong, the market tends to do well until the end of the year. Next week, balance of trade numbers for the Philippines and inflation numbers for the US on Wednesday, followed by the PPI numbers and another jobless claims report on Thursday. Now, these would be the last of the key economic data before the most anticipated FOMC meeting on September 18. In the meantime, here's another chance to lock in some gains, but just a bit of profits that you would want to realize if you were able to buy during the shopping spree months of May and June, especially for your positions hitting key resistance levels. Make sure you have some buying power to buy the dips on some stocks that could present some good technical setups in the coming weeks. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.